Welcome to you all. This video is going to focus on different candlestick patterns. Okay, so I'm pretty sure you guys might have gone through the article already. So now this is just to re-imprint what the article had to say to you guys. Okay, so the indicators are classified or categorized into like three. Okay, so we have what is called indecision candles. We have indecisive candles, and sorry, that's one and the same thing. So we have decision candles. That's what I meant to say. So we have decision candles and indecision candles. And then last but not least, we have reversal candles. Okay. So the names are self-explanatory there, right? So decision candles, in fact, we start off with indecision candles. Okay. So that you guys would know what a decision candle will then mean. Okay. So indecision candles, those would be candles that are not really it's basically where the buyers and the sellers are not quite sure in which direction the prices are supposed to move in. Okay. And an example of this would be a spinning top. Spinning top, it's basically, it looks something of this sort. Okay. Minimize this. Okay. And okay. So what we have on the chart right now, that is called a spinning top, which is an example of an indecision candle. Okay. Yeah. Okay. Anyway, so how does a spinning top form? Okay, that should be the question, right? So how does a spinning top form? Okay, it's a rectangle here. Anyway, okay. So how does a spinning top form, right? So you see the wick here. This is called a wick, by the way. Okay, that thing there. You can call it a stick, but yeah, traditionally it's called a wick. That's in W-I-C-K. Okay, or a shadow, a candle shadow. Okay, so these here, it's not a stick. It's called a wick, a candlestick wick, or a shadow, right? So that serves to inform a trader that prices have traded up to this top here during the life of this candle. Okay, let me show you how this candle came into existence. Okay, so say for instance prices open here, right? Okay, so prices open here, right? And then from there on, prices then rated upwards. Okay, they rated upwards, meaning there were a lot of buyers who were then entering, pushing the prices upwards. Lots of buying that was taking place, right? So that led to the prices going up. Okay, meaning at some point, this is what the candle looked like. Okay, might have been a nice green candle there. Let's change this into green. Okay, oops. Okay, so let's change this into lime green. Yeah, okay. So meaning, so the prices open here, right? Prices opened here, and then from there on, lots of buying started taking place, which led to the prices going up, right? So you see how the Forex market is always a numbers market, okay? It's a numbers game. So at any point in time, the prices will always move in the direction of a predominant party, right? So here it shows that there's lots of buying that is taking place, hence the prices are now increasing, going upwards, okay? And then what happens is then lots of selling starts taking place, okay? So there's lots of selling momentum, lots of sellers are then entering. For whatever reason, they're rejecting the prices to say, you know, prices shouldn't actually go any higher than they are right now. In fact, they should drop from where they are, okay? So as the byproduct of that, then sellers, lots of sellers start selling. So there's excess selling there. So which will lead to the prices dropping, right? So as the prices are dropping, so this is where the prices used to be, right? So as the prices are dropping, you'll then have that thing there, okay? This is called a wick, okay? That's not too clear. Okay, let me draw it. So that is called a wick. It will look something like that, yeah, okay? So the wick serves to inform you that prices were able to trade up to that high, okay? Up to that top. However, prices, the buyers basically, because they are the ones who are pushing the prices up to that high. So the very same buyers who are pushing the prices up, they were not strong enough to maintain those high prices. So as the byproduct, then sellers started entering and push the prices downwards. So as the sellers are pushing the prices downwards, you have the wick forming, okay, that stick there. okay? So the wick is there to inform you that prices were able to trade up to that high, but then with excess selling that is taking place now, the prices are now dropping, okay? So that is how the wick forms of each and every candle, that is, okay? So then prices are then pushed downwards further. Change the color thickness of this. Okay. So now the candle is then pushed downwards further, meaning at some point this would have been a red candle then. Don't worry, guys. On next video, we're going to focus on the anatomy of a red candle, right? Yeah. Anyway, okay, but just to briefly explain, so you see, whenever you find a green candle, it means that the current where the prices are now trading at, it's a much higher price than where we opened at. Okay, say for instance we opened at $1, right, and then the prices traded out to like $1.25. Okay, so from $1 to $1.25. Okay, with basically 25 cents up. Okay, so the prices had gone up by 25 cents. So the color of that candle will be green to simply indicate to a trader that prices had gone up ever since the candle opened. Okay. And then say for instance, candle opened at $1 and then started dropping to 99 cents. Okay. So the minute it drops lower than $1, which is where the candle opened at, then the color of the candle will then turn red to indicate that prices had now decreased or they had dropped. Okay. That's basically how the colors, the green and red colors that's what they signify. Okay. Anyway, so the prices then dropped, say to this low. Okay. And then prices then, as they were dropping to this low, then there's lots of buying that's taking place. Okay. There's lots of buyers who are then entering in an attempt to push the prices upwards. Okay. Let's say buyers actually do succeed in that attempt, right? They do in fact push the prices upwards. So as they are pushing the prices upwards, you'll then have a wick printing at the bottom there. Okay, remember the prices used to trade up to this low, but then with excess buying that started taking place, then prices had no choice but to basically start moving upwards to indicate that there's excess buying taking place now. Okay, and then the candle ends up closing something of that sort. Okay, so the wick on either side of the candle is there to inform you. It basically shows selling pressure as well as buying pressure. Okay, the wick at the bottom, it shows that there's lots of buying that started taking place, which led to the prices going up. And then the wick at the top shows that there's lots of selling that started taking place, and which led to the prices going down. So the candle is then termed an indecision candle for the reason that it is showing both the buying and the selling pressure. Okay. So here it's basically when the buyers and the sellers are not quite sure in which direction should the prices be headed in. Okay. Most of the time, it is used as an exhaustion candle. Say, for instance, after a prolonged upward trend or downward trend. Okay, let's take an upward trend for example. Okay, so an upward trend, the prices are going up. So after a prolonged upward trend, and then you have a series of spinning top candles. Okay, so that would mean that we don't have lots of buyers for the prices to continue going further upwards. Okay, because indecision shows that we don't have lots of buyers, right? Because in an upward trend, you're expecting strong, definite upward moves, right? But then with indecision candles, it shows you that now the buyers are basically running out of steam, they're running out of momentum, and we will most likely due for a reversal, a trend reversal, that is, okay? Anyway, this candle here is called the spinning top, okay? It's a spinning top. It's an example of an indecision candle, okay? And then another example of an indecision candle would be Dojis. Okay, so we have different types of Dojis, that is, but they all mean more or less one and the same thing. Okay, let's erase this. So that would be a spinning top, and then we also have a Doji. So, like I said, Dojis. We have like 4 types of Dojis. Okay, we have what looks to be like a capital letter T, and then we have what looks to be an inverted capital letter T, that is. And then we have this one that looks like a plus sign. And then we have this one, last but not least, that looks like a hyphen or a dash, whatever you call it, okay? So like I said, guys, at any point in time, whenever you find a wick, this thing here, whenever you find a wick sticking out to the bottom, that shows buying pressure, Okay, it shows that prices were being pushed down by the sellers. Okay, so prices opened here, right? So prices opened here, and then it started dropping as with the selling that was taking place at that time, right? However, with lots of buyers then started entering, then they started pushing the prices upwards. So as the prices are railing upwards, you have the wick forming. Okay, so the wick is there to inform you that prices or the candle used to be something of this sort. But with lots of buying, prices getting rejected there, then prices were then pushed upwards by the buyers. Okay, yeah. So it is for this reason that although a doji is regarded as an indecision candle, but in such a case, can an exception can be given to the buyers. Okay, an exception may be given to the buyers for the reason that the doji itself, it has a long wick sticking to the bottom. Okay, so this type of a doji is called a dragonfly. It's a dragonfly doji. Okay, and then here it's basically the opposite of the dragonfly doji, the following doji here. So prices open here, right? Prices open here, and then from there on, they are being pushed upwards by the buyers. So buyers are pushing the prices upwards. And then to that point, at which point lots of sellers then enter to say, no, prices shouldn't actually go any higher than they are now. Instead, they should drop from this level. So as the byproduct of that, then sellers start entering and push the prices downwards, right? So the prices, so the more sellers enter, the further the prices are going to drop to indicate that now the momentum is now changing, okay? So prices keep on dropping because lots of selling is taking place. The candle may end up closing something like that, okay? And then, like I said, a wick to the top. So whenever I have a wick, this thing here, okay, or a shadow, okay, a wick to the top that indicates selling pressure, okay. So an exception may be given to the sellers in such a case, okay. This is called a gravestone doji. Gravestone doji. Gravestone, might have to change the color. Okay, so this is called a gravestone doji. Okay, and then here, thirdly, we have a long-legged doji. Okay, long-legged doji would look like a plus sign. Okay, small is the same thing as a spinning top, such that prices open here, right? Prices opened here, and then from there on, they might have been pushed upwards, and then at which point, when they reached this level here, then lots of selling started taking place, which led to the prices dropping, which is why we have this wick forming there. Okay, so prices dropped up to this level, at which point lots of buying started taking place, which led to the prices going up. So which is why we have a wick here. So it shows you that prices, although the prices ended up closing at the same price where they opened at, but during the life of this candle, prices fluctuated from here to here. Okay, so the characteristics of a doji is basically any candle that has a small body or to no body at all. So the body would be so small that it looks like a line. Okay, you see how each and every candle here has a small body that it looks like a short horizontal line. Okay, so that's simply because the closing price and the opening price are the same. Okay, so the opening price and the closing price are the same. Okay, so it shows you that prices open, say for instance, at $1, right? Prices opened at $1, and then they fluctuated to $2. At which point, lots of selling started taking place. Prices then dropped because there's lots of selling that is taking place, right? So they dropped up to 50 cents. Okay, and then from there on, lots of buying started taking place. We ended up closing at $1. Okay, so we opened at $1. We went high as high as $2. We dropped as low as 50 cents. We ended up closing at $1. Okay, so the opening price and the closing price are the same thing. However, during the life of this candle, prices fluctuated to here and dropped to there. Okay, which is why we have the wick there. Okay. And then last but not least, we have a four price doji. Okay, before we even move on to that, this is called a long-legged doji. Okay, it's a long-legged doji. This is what it looks like. Okay, it's a long-legged doji, right? Okay, it's a long-legged doji. Okay, so along the doji, you see how in a dragonfly doji and a gravestone doji, an exception may be given to the buyers or the sellers, depending on either the candle being a gravestone or dragonfly, right? Long-legged doji, you have to wait for the following candle to serve as confirmation, okay? Because this then it shows you that there's 50 traders who bought using the same volume and 50 traders who sold using the same volume, okay? So no one really got the upper hand. So yeah, it's a draw, it's a tie, whatever you want to call it, okay? Hence, you should wait for the following candle to serve as confirmation. Say, for instance, the following candle becomes a bullish candle. Then it shows you that whilst we have 50-50, it was a 50-50 scenario here. No one really got the upper hand. But the following candle then shows you that shortly after this candle, more and more buyers entered, which then means that the buyers had actually won the battle here. So you then trade in the direction of the following candle. Okay. Yeah. And then last but not least, we have 4-price doji. Okay. 4-price doji, most of the time I don't cover this one. Okay. That is simply because it's very rare to find to come across this type of doji, especially in the forex market. Okay, because a 4-price doji means that we opened at a certain price and then closed at a certain price. So prices did not go up, they did not go down. Okay, so there was basically little to no trading activity that took place during that time period. Hence, the candle would look like a dash or a hyphen. Okay, so prices did not fluctuate. They did not really upwards or drop. Okay, they simply opened at 1 rand and then closed at 1 rand. Okay, so with the forex market being the biggest market in the world, then it's very unlikely to come across such a candle. Okay, because it's a 24-hour market for that matter. So there's always going to be someone who's up, although it could be sleeping, but there's always going to be someone who's up and trading. Okay, whatever time of the day it is, that is. Okay, so yeah. These are all classified as indecision candles. However, like I said, in a dragonfly scenario, an exception may be given to the buyers because we have a long wick sticking to the bottom. That's all buying pressure. It's indicating buying pressure. And then gravestone doji, what is it? This wick shows selling momentum. Okay, selling pressure. Okay, so an exception may be given to the sellers. Okay, and then here, thirdly, we have a long-legged doji, which shows it's basically in the middle of nowhere. Okay, it's an indecisive candle, so you best wait for the following candle to serve as confirmation. Okay, and then last but not least, 4-price doji, prices open at the same price and close at the same price. That did not fluctuate. Okay, that is it in terms of dojis. And then we have reversal candles. Okay, so what I've gone through so far, those are all just indecision candles. Okay, so we also have reversal candles. Okay, and those would be a hammer, which would look something like this, and a shooting star, which would look something like that. Okay, a hammer and a shooting star. Towards the left hand side, we have what is called a hammer, which is a bullish reversal candle. So the word bullish refers to any upward move. So when you're saying the market is in a bullish trend, that means it's an upward trend. Okay, simple as that. Okay, so if you're saying the hammer is a bullish reversal candles, it means that the prices are most likely to reverse and go upwards because the word bullish means up. Okay. And then bearish, that will be shooting star. So towards the right hand side, we have what is called a bearish reversal candle. Okay, shooting star, which is a bearish reversal candle. Okay, here a hammer is regarded as a bullish reversal candle. Okay, so same thing here. Remember, at any point in time, whenever you find a candle with a long wick sticking to the bottom, then that shows buying pressure, right? And then a long wick sticking to the top, that is all selling pressure. Okay, still together on that one, right? So here it means that the price is open here, right? The open here, so the sellers are basically pushing the prices downwards, right? So a hammer basically forms at the end of a downward trend or at the end of a downward move. Okay, so most of the time you're going to find a hammer, which will be an indication that that downward move has now come to an end, and you should now expect a reversal move. Okay, meaning we're now most likely to go upwards. Okay, so anyway, so prices open here and then they start dropping, meaning this candle would have been red at that time, right? So they would have been red, and then as the prices are dropping, they reach a level where there's lots of buying that is taking place. So then buyers then in turn push the prices upwards. So clearly you can see who's stronger here. Okay, who's strong between the buyers and the sellers, right? For the mere fact that although sellers were able to push the prices up to here, but the very same sellers were not strong enough to maintain those low prices. So the buyers then took the control from the sellers and started pushing the prices upwards. So it means that whatever gains that the sellers had made up to here, they had basically lost them, with the buyers basically pushing the prices upwards. Okay, so now it's called a bullish reversal candle for that matter. Okay, the color of this candle should be red, guys. Okay, don't get it twisted, because the opening price would be here, closing price would be here. Okay, but here it doesn't matter. Okay, it doesn't matter. The color of the hammer, in fact, doesn't matter at any point in time. Okay, we're always looking at how long the wick is in relation to the body. So this is called a wick. So how long the wick is in relation to the body, being that the longer it is, the better. Okay, and that shows that there's a bit of imbalance between the buyers and the sellers. So we're always looking to trade the imbalance between the buyers and the sellers. Okay, so here we have a shooting star. Prices open here and then start shooting upwards, right? At which point, upon the prices reaching that top there, then there's lots of selling that is taking place. So sellers are then basically rejecting the prices. Okay, so as the byproduct of that, with excess selling that is taking place, prices are then dropping. Okay, to indicate that there's lots of selling that is taking place. Okay, and then prices drop such that they end up closing something of that sort. Okay, so it means that whatever gains that the buyers had made up to there, they had lost all of them. Okay, maybe much of them, not all of them. Okay, so it shows you that basically the sellers are predominant. Okay, for the reason that they were even able to push the prices downwards. Okay, for that matter. Okay, because this downward move shows that there's a bit of imbalance here. The sellers are basically way too powerful. Okay, here the opposite would be true. The buyers would be powerful here, for the reason that we have a long wick sticking to the bottom. Okay, these are just called reversal candles. Okay, so if the prices are dropping, how do I really know that the prices are now going to go up or really upwards? I'm supposed to see a hammer. Okay, maybe a doji and then a hammer followed by a hammer. That's okay. So that would be an indication that the prices are now ready to go upwards. Okay, and then if the prices are going upwards and I'm looking for a selling opportunity, this is the candle that I would look for. Okay, shooting star. Okay, because a shooting star marks the end of an upward trend or an upward move, and then a hammer marks the end of a downward move. Okay, these are reversal candles. And then last but not least, we have Marubuzo candles. Okay, Marubuzo candles, so much of the time this would be classified as very strong bullish or bearish candles. Okay, depending on the color itself, being either a red Marubuzo or a green Marubuzo. Okay, not the perfect shade of green there. Let's go for this one. Yeah. Okay. So what we have on the screen here, we have a bullish Marubuzo and a bearish Marubuzo. Okay. This would be an example of a bullish Marubuzo, bearish Marubuzo. Okay. So Marubuzo would be a strong candle that has that does not have a wick. Okay. The opening price would be the same as the close. I mean, sorry. The highest traded price would be the same as the closing price. Okay. So you see, in this candle, there won't be any wicks whatsoever. Okay. So this would be the high as well as our closing price. So it shows you that throughout the entire session, the buyers had basically dominated the prices. Okay. In some cases, there could be like a wick at the bottom. For as long as the closing price is the same as the highest traded price, then it's still a Marubuzo candle. Okay. Because then this shows you that the buyers basically were controlling the prices throughout the trading session. Okay. Same thing goes with the bearish Marubuzo there. Okay, so a bearish Marubuzo, the lowest traded price should be the same as the closing price. Okay, so the closing price, which is here, should be the same as the lowest traded price. Okay, which is why you won't find any wicks at the bottom here. Okay, so it shows you that throughout the entire session here, the sellers have basically dominated the prices. Okay, in some cases you may find a wick at the top, but for as long as the lowest traded price is the same as the closing price, then it shows you that the sellers had been basically dominating, pushing the prices with force. They're basically strong here. Okay, so most of the time this candle forms in the beginning of a new trend or as a sign of continuation. Okay, so it forms in the beginning of a new trend or as a sign of continuation. Okay, that is it, guys. So we focus on three types of candles, right? We focus on indecision candles, right? Indecision candles at which point specifically focused on spinning tops, different types of dojis, because those are all just different types of indecision candles. Okay, and then we focused on reversal candles, okay, which is the hammer and the shooting star. And then last but not least, these are called decision candles, which is a Marubuzo candle. Okay, thanks guys. I hope you learned something. Till we meet again next time. Cheers.